Okay.
God, you got it, bro.
Hey everyone, my name is Julian Rennie, and I'm joined by my teammates Gavin Miller and Jade Bounds. And our project is on where a financial advisor should launch their career. And we use GIS-based spatial analysis to answer that question specifically for the state of Oregon. So, the financial advisory industry is one of the fastest growing professional sectors in the country right now. And according to IBIS World, Oregon alone generated $2.5 billion in industry revenue in 2026, with employment growing at an annualized rate of 5.7% over the past 5 years. By 2031, the industry is projected to support nearly 9,500 workers statewide. And for someone entering this field, the question isn't whether to become a financial advisor, it's where to become one. So the central question this report addresses is that, and rather than assuming that the Portland metro area, which is the biggest city in Portland, as we know, is automatically the best destination, this analysis applies 10 of our maps to evaluate Oregon's counties across a range of demographic, economic, and competitive indicators. The goal is to let the data identify where conditions are most favorable for an advisor launching their career. So Oregon's portfolio management and investment advice industry has grown at an annualized rate of 6.1% over the past 5 years, which actually outpaces the national growth rate of 5.5%. Despite this growth, the industry is geographically highly uneven in the state of Oregon. Multnomah County alone accounts for over 20% of all advisory establishments and nearly 42% of total state revenue. Counties like Deschutes, Jackson, and Lane show meaningful but comparatively smaller shares, suggesting that some significant portions of Oregon remained underserved relative to their population size. So, why Oregon? Oregon is it's a particularly compelling state to examine for this analysis. And the state's population grew 0.3% in 2026, supported by new business formation rate of 7.1%. Beyond that raw growth, Oregon has seen steady in-migration of retirees and pre-retirees, drawn in by Oregon's quality of life and relatively affordable cost of living compared to neighboring states like California and Washington. This population segment represents the core client base for financial advisors, and individuals navigating retirement home planning, retirement income planning, Social Security, and estate destinations that make professional advisory services. Excuse me, I'm getting a call here. Um, that make professional advisory services not really beneficial, but often essential. So our target clients for this analysis is a pre-retiree or a recent retiree between the ages of 45 and 65 with moderate to high household income and meaningful accumulated assets. Secondary client segments include self-employed individuals and small business owners who must independently manage both personal and business financial planning. Um, and counties where these client segments are most concentrated represent the most promising markets for an advisor entering the workforce. So now I'm going to hand it over to Gavin, who will talk you into the first five maps in our analysis.
And so I'm going to take you through the first five maps in our analysis. Figure one shows where the portfolio management and investment advisory businesses are located across Oregon in the NAICS code 52390. You'll notice a bunch of these businesses are gathered in Portland metro area, with Malometh County making up with 20.1% of all industry spots in the state. As you head south and east, the advisory firms become less common with moderate activity in Jackson, Deschutes, and Lane counties, kind of relative to their populations. This map kind of gives us a clear picture where this industry is already set up and highlights areas where this might be room for new practice. And as we kind of scroll down to figure two, median household income map. Figure two breaks down the median household income for 2025 by county. Washington, Deschutes County come out on top, showing the economic impact of Portland suburbs and the quickly growing Bend area. But in contrast, Eastern Oregon counties show much more lower income levels, which suggests there's probably less demand for premium advisory services in those areas. Counties with higher than average household incomes are more likely to have residents with significant assets, making them more likely to seek out professional advice. Bumping down to figure three, ages 45 to 64 map. Our figure focuses on folks around that age, 45 to 64, the key demographic of wealth accumulation. This group is getting ready for retirement and makes up the main client base for financial advisors. The largest concentrations are in Portland metro area, with a decent numbers also in Deschutes, Lane, and Jackson County, where you can look alongside the income data of Figure 2. The counties with large financial stable population in this age group stand out the best potential markets. Bumping down again now to Figure 4. Figure 4 looks at the population of 65 and older. Clackamas, Washington, and Linn counties lead the way here. While many people in this group may already have financial advisors, they often help during significant life changes like losing a spouse, inheriting money, or selling off assets. Areas where this older population made strong financial capacity are likely to have ongoing demand for advisory services. And last but not least, Figure 5. Figure 5 shows educational attainment, the shared adult age 25 and older, with a bachelor's degree or higher. Malometh and Washington counties take the lead, while rural areas of Oregon show lower rates. Higher education levels are often indicated by better financial how or know-how and wealth accumulation, as those with degrees usually earn more over their lifetime and are more inclined to seek professional financial advice. The high concentration of educated residents in Portland metro area in counties like Deschutes and Lane further confirms these spots as places where the demand for advisory services are strong and sustainable. That will conclude the five, and now I'll pass it over to Jade.
Thanks, Gavin. I'll be going through our final 5 maps and our conclusion. So figure 6 maps 2025 median home value by county. Again, the Portland metro counties and Deschutes County emerge as the strongest markets, with Jackson County in Southern Oregon also showing notably elevated values relative to the rest of the state. Home equity is often the largest single component of household net worth, and counties with high home values tend to concentrate residents with complex financial needs. Estate planning, investment diversification, and wealth preservation strategies that require ongoing professional guidance. As we move on to figure 7, we are examining the self-employment rates across Oregon counties. Self-employed individuals represent a particularly valuable client segment because they must independently manage retirement savings, business succession planning, tax strategy, and income variability, creating a natural and recurring need for professional financial guidance. Deschutes and Jackson County show meaningful self-employment concentrations alongside the Portland metro. In counties where self-employment is elevated alongside strong income and educational signals suggest that markets with both financial complexity and motivation to engage with an advisor. Moving on to figure 8, which maps projected population growth rates by county from 2025 to 2030. Deschutes County again stands out as the clear leader, driven by in-migration remote workers and retirees, and as well as young professionals seeking quality of life alongside economic opportunity. Population growth is a leading indicator of rising demand for advisory services. Expanding populations bring new households, new wealth formation, and greater need for professional investment guidance. So counties experiencing strong growth alongside favorable income and demographic signals represent markets where an advisor can expect not only current demand, but a client base that will continue to expand. So figure 9 uses median gross rent as a proxy for cost of living. Multnomah and Deschutes counties show the highest rental costs in the state, while Eastern Oregon counties show considerably lower levels. For an advisor in the early stages of building a practice, cost of living shapes the income threshold needed to maintain financial stability before a full client base could be established. Mid-tier markets like Jackson and Lane counties offer access to a viable client base without requiring the high personal income needed to sustain life in Oregon's most expensive markets. And on to figure 10, which maps the 2025 median net worth by county. Arguably the most direct indicator of demand for financial advisory services, as it captures the full picture of accumulated household assets, including home equity, retirement accounts, and investments. Multnomah County leads the state, but Deschutes and Jackson County show strong and growing net worth levels that are likely to increase significantly in the years ahead, making them compelling markets for an advisor entering the workforce now. And so, in conclusion, bringing all 10 indicators together, 3 counties emerge from this analysis as the most compelling markets for a financial advisor launching a career in Oregon. However, Deschutes County is our top recommendation because it demonstrates above average performance across nearly every indicator that we examined: population growth, household income, home values, self-employment rates, and an expanding 45 to 64 age cohort, while maintaining comparatively lower advisor density than the Portland Metro. Bend's ongoing in-migration of higher income residents suggests that demand for financial advisory services will continue to grow for years to come. Washington County would be our second recommendation for advisors prepared to compete in a more established but exceptionally wealthy market. It ranks among the highest in the state for income, educational attainment, and home values, with large and financially sophisticated population actively engaged in retirement planning and wealth management. And Jackson County, anchored by the Medford and Ashland area, of course, is our third recommendation and the most favorable environment for an advisor in the earliest stages of their career, as it offers consistent mid-tier performance across all indicators alongside lower competition and cost of living, a market where professional relationships and community presence can meaningfully accelerate one's career growth. Eastern Oregon counties, while affordable, consistently underperform across income, education, home values, and net worth indicators and are not recommended as a primary launch market for a financial advisor entering the workforce. And so, as a final note, our executive summary at the bottom of the story map provides a complete overview of the project purpose, our methodology, findings, and recommendations for anyone who would like a concise review of the full analysis. Thanks for watching our presentation.